So many investors feel that you have to only invest in your own backyard. I've actually heard a lot of investors say, if I can't drive there, if it's not within a 2 hour drive, you shouldn't be buying it. But another friend of ours, another friend of mine named Robert Helms says, live where you want and invest where the numbers make sense. And so my buddy is on today, Chad Zdenek, and I'm really excited to have a conversation with him because he has been an operator in Southern California, one of the most difficult places to run a syndication business because of the local jurisdiction, the landlord rights, population growth. I mean, it's just it's hard to even cash flow properties here. And now he started buying properties out of state. So I wanted to have a conversation about that. And maybe this will be applicable to you if you're a syndicator or if you're a passive investor, and just the idea of how could you get comfortable investing in an area out of state or that's a flight or maybe even a couple flights away. So Chad, welcome. How are you doing today, buddy?
Doing good. Thanks for having me on.
Oh, it's really great to have you, man. It's you've become such a good friend of the last few years, and I know we like my event buddy. We go to a lot of the real estate guys events, and we went to Belize. We're roommates there. It was a lot of fun. So I feel like I just really enjoy all the time we spend together. But wanted to just have people get to know you a bit because I've just really appreciated our friendship and all the value you've brought, and you've been so consistent on a lot of things. And of course, your background is as a rocket engineer, and you even were featured on a National Geographic show called Inside Mighty Machines. Is that what it's called? That's correct. Yep. And so you bring this just incredible depth of knowledge and all sorts of other things. And I love it because I'm sure that applies as well to multifamily. But why don't you give people a little bit of background about yourself and kind of how you got here and just some things that you're doing?
Sure. Yeah. So I've had a meandering path. I feel like I've had maybe a few lives, but I got into construction management about 25 years ago. Got my contractor's license and my professional engineer's license in structural engineering, and quickly moved out of construction and into the more engineering world. Worked for Boeing, who had bought Rocketdyne at the time. So I was actually working as a structural dynamics engineer on the space shuttle main engines, hence the rocket scientist part of me. So I did that for 7 years before starting a business with my brother, doing Christmas lighting things of all things. We grew that to be a pretty decent sized company, had about 75 employees. And towards the end of that chapter, I started doing some real estate investing. And then once my brother bought me out of the company, then I had some money to do more serious real estate investing, and learned, like a lot of us do, that we run out of our own money. And so I started syndicating and bringing in other investors, really like before I'd gone to any conferences or anything like that. I just kind of did it the school of hard knocks. I mean, I had been investing and I had a really good background in construction and engineering, which helped. I'm also a math guy, so Excel is no problem. But certainly syndication was really new to me. And I started doing it in my backyard here in Long Beach. And you're right, the landlord rights are pretty thin and lean here in California. Certainly makes it very challenging. But that wasn't what's kind of driven me out so much. It's really the uncertainty from a legislative standpoint in California. That's a big worry of mine. And I had accumulated several investments in SoCal, and just got a little nervous about having so many eggs in one basket, so to speak. And then, so I decided to start investing out of state passively with different operators. And then finally partnered with people to do my own active deal out of state, which I'm doing in Tallahassee, Florida. And now it's kind of off to the races. So it's not so much that I'm leaving Long Beach altogether. I really want to offer like Long Beach or SoCal investments and out-of-state investments, because what I've seen is some investors are really like almost polarized. Like some say, no, I have to invest in California. That's where I live and that's where I want to invest. And it's like, okay, and I get it. We've got great appreciation here. So I still invest in California. But then other people say, you know what? No, I don't want to invest at all in California. I want out of state. Give me a good state with good population growth and easy taxes and low regulation. And so they want to go there. So ultimately, I'm just kind of offering both options to investors.
Yeah, I think it's an interesting process that you've gone through. I remember we had conversations about that for a while, where it's interesting. You could buy a a 12 unit in Long Beach, or it'd be like a 100 unit in Atlanta, and it'd be like the
Yeah.
same price. It's interesting. And then the cash flow, and of course the tenant stuff, and California has rent control. And there's just a lot of other tenant right stuff here. And I'm not against tenant rights. I think tenant rights are great, but I think landlord rights are also very important. And one kind of example of some of the craziness, and you talk about the legislative risk in the city of Los Angeles, they have extended now. We're recording this in July of 2022, but they've extended the eviction moratorium to at least June of 2023. So people really have no incentive to pay. And actually, it's UCLA did a study and found that over 50% of renters in the city of LA have stopped paying rent, which is absolutely insane. So if you're an owner, I mean, and I think there's no more relief yet, right? Or there's very little relief for some people. So it's an interesting thing going on. So well, that's really interesting. So you started, you did start looking out of areas. So talk to us a little bit about that process. You obviously passively invested. I think that's a great idea for people that want to learn or get involved in different areas, is to passively invest. But what about, I guess, what did that look like for you? I think there's like they're doing some chipper across the street. I don't know if you hear any background noise there from the chipper. Okay. So I hear this like hedge. I'm always recording a video and they're like hedge trimming across the street. I live like a lot of green space around. But anyway, so you've started to invest elsewhere. How did you build your team, or are you the one actually doing the work in Tallahassee, or how is that working? Can you talk a little bit about kind of how you got into this deal, or how you would advise somebody who's maybe more investing passively or actively locally to start looking in another market?
Yeah, I mean, I think for me, it was a pretty big shift because I was the sole GP on all my projects here in California. So I'd never, I mean, I had, like property managers I'd worked with, or GCs and brokers and loan brokers and all that sort of stuff. I had like people I'd work with, but from a GP standpoint, it was just me. And it's good and bad. It's good because I learned a ton of stuff, but it's bad because I'm limited on how much I can do because I'm just one person. So what I found to be really helpful in scaling is partnering with other people and being able to do bigger deals. I mean, you've been doing this for a long time, so you know this better than anybody. But it certainly is a great way to scale when you partner with people, and then you kind of decide what you're going to do. And in my example, I started, actually the first conference I went to is I met you at Bronson at Dealmaker Live, when you were working, you and Michael Blanc were working together, and that's where we first met. And I've learned like going to these conferences is really, really helpful in just getting to know people and finding out, whose strengths are what, and who might complement you in different areas to try to assemble a team to do a larger deal. And so I had gone to some of the Think Multifamily conferences, and I met these guys from a Premium Cash Flow who I'm working with now, and just met them at a conference, and then kept in touch. And you had a good relationship with them, and I have a good relationship with you. And you said, "Hey, Chad, you should talk to these guys. They're doing a deal." And it's like literally, like if I wouldn't have known you, I wouldn't have had that introduction, even though I knew the guys. Like you were like the connector, you said, "Hey, Chad, talk to these guys." And so it's like, you can't put a price tag on that. And it takes a lot of time, I think, and an investment in time to go to the conferences and network, check in. You and I have been at a ton of different events together. And so like, yeah, I'm towards the top of your list. You're towards the top of my list because we put in time. And I think that pays off. So in this particular example, I've been helping out with the construction side, and actually during due diligence, we had an engineering issue. So I flew out there to work on an engineering issue we had that we needed to get kind of squared away with the seller. And so I've been pretty involved in that part of things, involved in bringing investors to the deal. And then also, as we move forward, staying pretty involved on the construction side of it, because that's my background. So really, I guess the raising money, the engineering, and the construction management / asset management are probably like the strengths of what I'm bringing to the table. Although I'm not going to be on site very often. This is in Florida and I live in LA. But certainly I'll be really pretty involved on a weekly basis for everything that's going on there.
When you're sharing, I think one thing is highlighted. I remember the story of a guy I talked to, and he was like in like Wichita, Kansas. I have calls with people schedule calls, and some people are passive, some people are active. This guy was active, and he's like, yeah, I have 20 units here in Wichita, or 50 units, whatever. And I started asking him, oh, do you go to any events or whatever? He's like, no, I just do things virtually, and I just do this and that. And I just think, I just kind of thought about it. I was like, man, I was like, this guy's really limiting himself. It's just amazing when you go to national conferences. I mean, meetups are great. And, I run a meetup. You're speaking at the meetup next month, and it's going to be awesome. And we have a good crowd. If you're ever in Southern California on the first Wednesday of the month, we have a great group that we have a meetup for. But, it's when you go to events, you get to know people and they get to know you, and you start to develop a reputation. And then it is a pretty small industry. There was also a investor that I have that sent me some information, said, oh, hey, I got reached out to by this kind of online guy about this particular deal. And I'd never heard of the guy. And she sent me some of the stuff, and it kind of looked a little spam. He was kind of a little ClickFunnels kind of thing. And I just had never heard of the guy. And I was thinking like, okay, well, maybe somebody knows him. I don't know him. But I said, if I was going to be a scam, I'd be doing something like that, right? Just where you're throwing money at a funnel, nobody knows somebody, and they're kind of anonymous. But it is really amazing. Like you said, when I vouch for people, you're like, oh, I have a greater comfort for them. And it's the same with me. Like if you vouch for somebody, I'm like, well, I should really get to know them. And it's just amazing how collaborative it is. And if you're a passive investor, I would say it's even more so, because when you go to conferences and you can look someone in the eye and you can shake their hand and you can see how other people treat them, and you can kind of tell who's respected in a room, right? Because of the way they're treated. So I know you go to a lot of events, Chad. I go to a lot of events. And so probably, 1 to 2 events a month out of area. It's a lot of work to do. It's a lot of investment of time, of money, of everything. But it's absolutely worth it. So I love that you've been able to develop some partnerships in that. Talk to us a little bit about your process in this. Obviously, like you are going out of state, you're doing stuff locally as well. What's something that you wish you had known sooner about syndication, or about partnership, or about real estate investing in general?
You know what? I think we've been talking about it, but I really think the networking and conferences. I think a lot of people think of their network as like just kind of like their hub of people that they know, and like, oh yeah, I talk to my buddies or I talk to my coworkers, and like that's my network and blah blah blah. But I think to be successful in this business, it's got to be a lot bigger than that. And look, the conferences are the best way that I found to do it, and mastermind group. So I joined the real estate guys mastermind group. Actually, you just joined it too. For once, I was in front of you. I joined before you did. Usually it's the other way around.
You did, yeah, yeah.
But yeah, I mean, look, the syndication mentoring club is great, and it's like it's not all beginners. In fact, there's like very few beginners in these groups. A lot of really established people doing really good things that are looking to kind of bring their game to the next level, and also to partner with people and find people. So we were talking about offline that my partner in the Tallahassee deal, Sakar, he's been in the business over 20 years, and he's got over 6,000 units under management. And he's looking to join. He's talking to you and saying, hey, Bronson, tell me about this group, because he wants to join it. So that's just an example of somebody who's been around for a long time and who recognizes the strength in networking and mastermind groups. And I wish I would have started a little earlier. I'm definitely late to the game on that, and I wish I would have started that earlier.
You're right. I think you can't underestimate the power of being in the right room. And our friend Russell Gray says that, if you're the smartest person in the room, it's time to find a new room, right? And I think that's so true. You want to be at a room where people are smarter. They're being encountering new and all kinds of different things. And that's why I'll pay. I think this year in 2022, I'm paying like over $50,000 to go to different masterminds or be a part of events or do different things. And I think it's absolutely worth it, because I learn, I grow, I find partnerships, I find investors, and then, an event we were just at recently was the Real Estate Guys Summit, which is an awesome event. It was in Belize, and it was expensive. It's, $6,000-7,000 a person. And I remember when I first started going to this event, I was like looking at how much I'm making per year. And I'm looking at, like, this is a lot of money. This is a lot. But
Yeah.
out of the first time I went, I found a partnership that I was able to 10x my net worth and raise over $15 million when I'd only raised $100,000. So I think if you're trying to get there faster, whether you are passive or active, by getting around people that are successful and wealthy and are doing some next level stuff, it really does open a lot. I actually joined a new mastermind that I'm actually become a coach, money raising coach at, called Kingdom REI. And so I'm really excited to partner with Ellis Hammond on that. And so that's basically a faith-based group where we help people to get started in syndication, to raise money, to basically do what we're doing on their own. So it's so interesting when we do this business chat, because some people approach it from a completely passive standpoint. A lot of our listeners are fully passive. They don't have no desire to go do it. The other ones are like, they only want to do it actively. And some people have money, they don't have money. But that's the amazing thing. Like when I started, I didn't have any money, but then I learned you can raise money, and it kind of opened up everything for me. So that's been a big learning there. So let's talk a little bit about what kind of where we're at right now. At the time of this recording, interest rates are rising. They're raising 75 basis points a month. It kind of seems like we've noticed just a little bit of investor softening as far as investor interest, which I think is kind of counter what people should be doing. I think they should be even more jumping into multifamily because of inflation. People are just losing so much money by sitting on the sidelines. But what are some of your thoughts as far as inflation, as far as what's happening in the market and where we're headed?
Yeah, I mean, look, I think it is a really dynamic time, and no matter how challenging things get, I think there's always opportunity to be found. Sometimes you just got to be a little bit smarter or more strategic about finding it. And I think a lot of people are still kind of shell shocked from the global financial crisis, right? And that hit the housing market really hard. But I think you got to look past that in order to figure out what the drivers were of that. And once you do that, you realize pretty quickly that this is a different animal, totally different animal than where we were in 06, 07. And for me, the big drivers are inflation, like you mentioned, which is, kind of whittling away any cash reserves you have at a pretty fast pace. The other big thing is that, and I know you've talked about this on some of your other shows, is that we're still down on inventory since 08, right? So if you look at how we kind of fell off the cliff in terms of creating inventory or housing inventory in 08, it took us like 11 years or so to get back to that 40-year average on what we're creating. And so what that's really done is we've been undersupplied for over a decade now, finally just caught up. And we're still really, really well below where we need to be from a housing supply standpoint. And I think that classic supply demand is going to continue to push things up, even though we have, people talking about a looming recession. And if you listen to Danielle DiMartino Booth, she'll tell you that we're already in a recession. So I think despite that, with inflation where it's at and inventory as low as it is, I'm all in on multifamily, and I'm investing all my money in it. I continue to do so. I bring investors with me. And to me, you got to be careful on what you're buying. And I think sellers have not quite adjusted to where things are at just yet. I think that they will soften the prices a little bit, but really only because of mortgage rates. But it's not going to come down a whole lot. And I've never been one to time the market correctly, so like I don't time the market. I'm creating a generational wealth in real estate. I'm in it for the long term, and I'm not trying to get it at the very, very bottom and sell at the very, very top. That's not me. I'm a buy and hold guy, and I try to encourage my investors to do the same.
Yeah, that's great. No, that's very similar to my thoughts as well, that we are in a time that's very unique, and it's really a lot like the late 70s, early 80s, where inflation's high, stagflation, unemployment will start to rise, or if interest rates rise, it gets painful. It gets painful at the pump. People are not necessarily making more money or not much more money, and it's hard. And then we have supply shortages and other things, but that's very similar to what happened in the 70s. And I think just getting your money into assets that will keep pace with inflation is really valuable. And I think if inflation is 8.5 to 15%, as long as rates are not that high, you should be doing just fine. And so we're still finding on multifamily rates of 4.5% or lower, even when rates for single family are higher, at least at the time of this reporting. What are some?
And Bronson, I'm sorry, let me mention one more thing on that, which I think is pretty important. People are worried that the mortgage rates have gone up to 2% in the last 3 months, but historically speaking, they're still super, super low, right? So, I mean, the fact that it's gone up, okay, yeah, we were at like unhistorical or, unnormal low rates before, and now we're getting closer to normal, but we're still well below what you would say a normalized rate is over the last 40 years or 50 years. And I just think it's sometimes you got to take a longer perspective on things to realize that yeah, this isn't a very big deal for rates to be where they're at right now, especially when you have the inventory as low as it is and rents rising as high as fast as they are, in part due to inflation.
Yeah, that's the whole I call it, Warren Buffett's margin of safety, right? So the margin of safety is if you're buying stuff where you have upside in the rents. So I know you're seeing that in Tallahassee, we're seeing that in Jacksonville, where we're buying places rents are 900, 950 a month, and we're seeing going rate for renovated units is 1460. So we have a lot of room on the upside. So that puts your margin there versus if you're buying Class A apartments that there's no value add. I think there's a lot more risk there. So I think it is important, it's kind of what type of investment it is as well. Well, kind of on that note, obviously I think people are very interested to know what's happening now, interested as far as interest rates, interested to, what do I do with my money? But what are some tips that you would give passive investors to pay attention to, or even some resources that you'd recommend that people should be open to look at?
Yeah, look, I mean, I love the idea of passive investing. Like I mentioned, I do it myself. I hope to be doing a lot more of that in the future. That's really kind of like the golden egg, is to get to that passive income lifestyle. I think as a passive investor, I think the number one thing to look at is your GP team. I think that's a lot more important than the asset. It's more important than the location. It's more important than the terms, because a lot of things can go sideways. There's going to be issues in every deal. There's going to be issues that come up. And for me, the big question is this a GP team that's got the experience and the knowledge to be able to get through those issues? Because there's going to be issues. I mean, you could buy the best deal and that deal is going to have issues, right? So that location is going to have issues. And you're really going to be relying on your GP team to figure it out. And a lot of the time as a passive investor, like, you're not even really going to know the nuances of what's going on, right? I mean, that's why it's really important to trust that team, because they're the ones that have to deal with it day in and day out. And if you find the right team that's got the experience, the knowledge, and sometimes the deep pockets to deal with some of this stuff, to me, that makes all the difference.
Yeah, I think you really can't underestimate the value of your team, of getting the right people in the room, working on a project together, trust. I mean, I think, and it's hard, it's hard. I've had people, I guess it's the most humbling thing in the world. I mean, we have people that, literally find us through this show or through, I was on a podcast, and then they invest 100K and you've never met them, or they invest more than that. And it's really humbling. But I think that, at the end of the day, it's about creating positive relationships, really positive results. I think communication is really important. I think performance is really important. I know you're committed to really serving and helping people, and I really appreciate that about you. And you're obviously very gifted in a lot of different ways. But what's something, I guess, new that you're working on right now? Obviously, you've got your deals, out of state you're working on. Is there anything else that you're paying attention to, or that you're working on personally, that's like, here's an area of interest for me kind of in the investment world? I mean, you mentioned passive investing, and I think it's true. We should all aspire to be full-time passive investors, right? Because at the end of the day, it's awesome. You get to do what you want with your money. You don't have to answer to anybody, and that would be awesome, right? So I think we should all aspire to that. But what are some things that kind of areas of interest for you that you're looking into?
Yeah, I think that the next big step for me is going to be self-storage. And I've been investing passively and doing a lot of homework and research on the self-storage space, talking with different potential partners. And I'd like to start diversifying actively more into that space. There's a ton of really positive things about that I won't go into on the show, but I really like self-storage, and I'm looking to do a lot more in that area.
Yeah, self-storage is very similar to multifamily. It's very recession resistant. It's very solid for a lot of reasons. And I've passively invested in self-storage as well. I like it. I think it's great. I think multifamily, self-storage, mobile home parks are all great places to be. And there's, obviously a lot of people doing some very interesting things there. Chad, again, I want to just really honor you for coming on the show today. And I think for anybody that doesn't know you, I think they should know you because you're an awesome guy. And I think that, you have some unique deals that you bring, and also your experience both as a rocket engineer as well as an operator give you a lot to share versus just somebody who's hanging a shingle, raising money for a deal. You bring a lot of insight and a lot of depth to deals and just, evaluating risk and all kinds of things. So appreciate that about you and appreciate your friendship.
You.
But what are some ways that what's a way maybe people can reach out to you if they want to connect?
Yeah, I think the best way is probably just through CSQ Properties, either YouTube, Instagram, Facebook. You can also go to csqproperties.com or email info@csqproperties.com, and happy to connect and help anyone out however I can. And really appreciate you, Bronson. I mean, I think you put out a lot of really good content. You bring a lot of really good people together. And I think eventually we'll end up doing a deal together. I'm kind of surprised we haven't done one yet, but I'm sure it's in our foreseeable future because you're a great guy.
Thanks, man. I'd love to do a deal with you, man. It'd be great. So awesome, brother. Well, thanks again for taking the time. We'll have to have you on again in the future, and I look forward to seeing you. I think we're going to be in Vegas together at a real estate guys event coming up here, so that'll be fun.
Yeah, next weekend. We'll see you there.
Yeah, awesome. Thanks. All right, so Chad is a good friend, a great guy, and just a straight shooter, which I love about him. But the idea of investing out of area, it can feel uncomfortable for a lot of people. And so maybe for you, you've had some of those same feelings of like, I'd love to do it, but I don't know how to. I just want to, have hands-on or do my own deals only, and even investing passively sounds like a big stretch. But the amazing thing is when you set up a team out of area, or you have a great property management group or an asset manager or partners that help, it really gives a lot of comfort. So to me, I've set up my business to where I have partners that are in Jacksonville, Florida, or in Atlanta, Georgia, and they're on site every week or two. And I'm not the one who's actually going and doing a lot of the asset management. I'm a part of the calls, I'm a part of the asset management, but I'm not the one who's on site as much. And so it forces me to really make sure I vet my team well. I look at prior experience, I get references, I do all that stuff. And that's something that you can do as a passive investor, or you can do if you're trying to be active. And a couple takeaways I got, and again, some of these things I feel like I just like beat the drum because they've just absolutely changed my life. But going to national conferences, they're happening all the time. If you email me or you reach out to me, send me a message, I'd be happy to send some to you because there's just so many good conferences out there. And when you go, you're going to meet other investors, people that are serious about investing. You meet syndicators that syndicate different types of deals, whether it's multifamily or other things. And just being in the room, it really, really helps you. And that also goes with masterminds. I've joined and become a part of Kingdom REI, which is an awesome mastermind group to help people to really learn, and around, this has similar values, but to be around people that are really trying to make a difference in the world, as well as really grow their business, leave their job, really change their life. So that's why I pay to be in rooms. That's why I join groups like this, and I'm a part of multiple groups. And then it just kind of goes to, I mentioned this, but the idea of really building your team. If you're a passive investor, you're not exempt from this. You need to have a team. One person on your team is your CPA. Another person is the person that you invest with. Maybe you have other people that are on your team. You have an attorney that helps structure some of your, maybe a living trust or other sorts of entities that help protect your wealth. So team is really, really important, whether you're active or passive. So I hope you enjoyed this episode of Mailbox Money. I really enjoyed it. I love talking with people that are good people. We have intelligent conversations about the economy, about the world, about investing. And I hope that, feel free to share this episode or even share other episodes. We're trying to grow our reach, be able to get better guests. And really what makes this all possible is you. And if you please consider writing a review, because if you write a review, it'll really helps us to be able to be ranked higher in iTunes and some of the other platforms. So thanks for taking the time, and the best investment you can make is in your own education. We'll see you in the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.